Look, if you're buying real estate right now, there's a couple things that I want you to keep in mind when going into this real estate market. Prices have gone up significantly over the past 12 to 18 months, and in most of the country, they've risen pretty significantly as well over the past 5 years. Over the past 5 years, the median home price in the United States has gone up over 50%, and in the last 12 months, in a lot of markets, it's gone up over 12, 15, even 18% in some markets. Looking here at the map, Utah, my state, saw 10.5% appreciation in quarter 3 2020 compared to quarter 3 2019. That number has only gotten worse. Idaho saw 14%, Arizona saw 11%, Washington saw 10.8%, Tennessee 10%, Montana, New Hampshire, Georgia, Ohio, and Missouri all saw 9% increases year over year as well. So this is a very large number. Honestly, in real estate, we only expect to see a 3 to 4% appreciation year over year when you look at a large enough time span. Now, some years are going to be higher than that. Right now, obviously, we're seeing that. And some years will be lower than that, where the appreciation might be flat or it could even be negative based on if those prices are dropping. So the thing that you have to keep in mind if you're going into purchasing real estate this year is look at it from an investment standpoint. When you look at it as an investment, you have to look at it and say, okay, I'm going to purchase and hold this real estate for at least 5, 10, 15, 20 years, right? In most cases, unless you're getting the house way under market, you do not want to be buying at market value if you're not going to hold on to it for long term. If you're only planning to hold on to this for maybe 1 or 2 years, you just have to come to understanding that there could be additional risk because home prices may not keep going up forever. Right now, we've seen such high appreciation that, everybody's kind of expecting, hey, is there going to be a crash sometime soon? And although I don't think there's going to be a crash, I still think that you have to protect yourself from that possibility. When you go into this process and you're buying real estate, you have to look at it and say, okay, there's a possibility that could crash. Nobody really knows what's going to happen 12, 18, 24 months out from now. We could have another pandemic. We could have World War III. There could be a major natural disaster or something. There's a lot of things that could come into play that could actually affect the real estate market negatively. Now, I do think that if you're in a market that is growing very quickly, for instance, my state, Utah, Idaho, Arizona, Texas, Florida, a lot of these states that are seeing tons of rapid appreciation and growth, I think that you'll probably be okay. That's just my own personal opinion. If you're in a state where people are leaving, then, be careful. Make sure you're buying good, high quality real estate that people are going to want to buy regardless of whether the, population goes down or if it keeps growing, right? When I look at real estate, I think about it in a couple different ways. I think right now, the only thing that is going to slow down the real estate market from continuing to see increased appreciation is going to be interest rates. The reason why, a lot of people are saying right now is, hey, home interest rates are so low that a lot of people are able to qualify for more than they were, 6 months ago, 12 months ago, or in the past, right? So as the interest rates come down, they can afford more on their monthly payment and can then buy a higher priced home. So if those interest rates go up, then what people can afford is going to come down. The other side of that is that right now, one of the reasons I don't think that we're going to see a crash anytime soon, at least in my market, right? And across a lot of the country, right now, it is extremely hard for people to get, for companies to get workers. A lot of companies are saying, look, we need workers. I mean, I'm seeing signs at almost every single fast food place, every single grocery store, every single retail shop around in my area. People are saying, hey, we want jobs, right? Well, and potentially that's because some people are going to be on an unemployment and so they haven't gone back to work. Or potentially it could be because those people who are in those jobs have now moved on to other higher end jobs, right? Kind of higher paying jobs that are in more of a specialized field. So if that happens, if people move into that specialized field, even the companies at the higher level are having a hard time finding qualified workers. So if those guys are having a hard time finding them, then they're going to be paying more to people to fill those jobs. As those people earn more, then that means they're going to be able to afford more. Now, I know this doesn't encompass everything. Housing is still crazy high, and a lot of people think it's unaffordable. But for me, I look at it and I come back and I say, look, honestly, if there's supply and demand, until those meet, people are going to keep buying the houses, and it's affordable for some people. Yeah, you might have to spend a little bit more than you would like to based on your monthly income, but you have to kind of make those compromises. Some people are going to spend more and be okay with that. Other people want to keep it a very low percentage of their income overall. But for those people who are going to continue purchasing real estate, you have to look at it in this way. Number one, you have to look at it as a long-term investment that you plan to hold on to for 5, 10, 15, 20 years, so that even if the market does drop, you have the ability to hold on to it, continue paying the mortgage, continue paying the rent, whatever it may be, and be able to sell it at some future date. Now, the other side of that is you have to make sure to not put yourself in a financial situation where you would have to sell the property. If you own your own home and that's the only place you live or the only place you own, then you need to make sure you've got at least a couple $1,000s. I'd say probably 3 months at least of reserves to be able to make your payment if something were to happen. That 3 months should give you enough time to kind of figure out what's going on. If you lost your job or you had a health event or something like that, that'll kind of give you enough time to figure out what's going on, and then hopefully sell the property if the market's good, or if it's not, figure out another plan so you can hold on to that property until the values come back up if we do happen to be in a down market. Now, if you're talking about investment properties, then yeah, you need to have access to cash or cash reserves for at least 3 to 6 months, in my own opinion, to be able to cover all of those payments if something were to happen. Now, the good thing about investment real estate is that generally somebody is renting the property and is going to be paying you, and that should at least, hopefully, if you bought the property right, should at least be producing cash flow, breaking even, or just a very slight, you might be slightly under the monthly rent or monthly mortgage, right? Let's say your mortgage is $2,000, maybe you're getting $1,800. Okay, well, you're still covering a little bit of the monthly mortgage on that property, but it's a lot better than selling. Now, if that tenant has an issue and they can't make the rent payment, well, then you should be able to find somebody else who can move in and at least cover that property on a month-to-month basis until that property value goes back up to where it should be, to where you can actually make a profit. So if you're buying real estate right now, you have to look at it in these two ways. I'm not saying don't jump into the market. I'm not saying, don't buy investment property. There still are deals out there. There's still, in my own opinion, I think it's still a good time to buy real estate, especially if you're in one of these hot markets. And I think it's still a good time to continue moving forward with your investment plans and trying to purchase real estate that is going to help you build that long-term wealth. If you look back to before the real estate crash back in 2005, 2006, we're saying home prices are extremely high right now. And yes, that's true. They were extremely high at that time. But if we go back to that, and look at those prices and compare them to today, prices today are significantly higher than they were back in 2005. So if you owned a home, let's say you bought it in 2002, and by 2005, 2006, you're like, man, prices are out of control. Then it goes through the crash 2008, and then prices come back up. Well, if you held on to that house for 15 or 20 years, which is a long time, if you did hold on to it for that amount of time, then you would be above water at this point, and you would have a house and an asset that is worth significantly more today than it was back then. So the thing with real estate in most cases when it comes to building long-term financial wealth with real estate is you have to hold on to it for a long time, or you have to continue to roll up, right? Yes, you can make money flipping houses. Yes, you can make a quick buck by buying something and then selling it in a year or two. But if you hold on to it for the long term, you're going to be able to build extreme amounts of massive wealth over the coming years. The more real estate you own, the more you will build that wealth and the quicker it will be. Guys, I hope this video was helpful for you. If it was, give me a thumbs up. Subscribe to the channel if you want to learn more about real estate, stocks, money. I talk about all that stuff here on the channel, as well as just some other fun topics that I like to talk about every once in a while. Thank you so much for watching. We'll catch you in the next one.